Hello everyone, I am Nehal Doshi from Figment Global Solutions. Welcome to our exclusive webinar on the changes with respect to TDS and TCS under the New Income Tax Act 2025. So, to begin with, the introduction of New Income Tax Act 2025 has naturally raised several questions, especially around TDS and TCS provisions. While many rates remain unchanged, the structure, section references, and interpretation have undergone significant changes, making it important for professionals to clearly understand the new framework. Today's session is designed to give you a clarity and practical insight so that as tax professionals and finance teams, we are well prepared for FY 26-27 compliance. Now, moving ahead and introducing our speaker for the webinar. We are privileged to have with us CA Himanshu Chordia, who will be leading today's session. With his deep expertise in taxation and hands-on experience in handling large-scale compliance through technology-driven solutions, he'll walk us through what has really changed, what remains the same, and what needs your immediate attention. So without further delay, let's begin today's session. Over to you, Himanshu.
My so good afternoon, everyone, and thanks, Neha. We are starting with our webinar for the new Income Tax Act 2020-25, and it's more focused towards the TDS and TCS compliances. What changes has been brought under the new Income Tax Act 2025? I'm just sharing my screen. Then my screen is visible.
Yes, it is.
So we are just starting. What's the changes has been done in the TDS and TCS under Income Tax Act, New Income Tax Act 2020-25, which was already passed by the government, and it will be applicable to all the organizations and at from 1st April 2026. So what the new Income Tax Act that has been come, because the old Income Tax Act is the Income Tax Act 1961, it was coming with the new Income Tax Act 2025. So what transition actually that has been done under this new Income Tax Act? Majority of the things has been simplified. The uniformity in the tax compliances has been done. The more focus that has been given to the digital compliances, and they are trying to have the system-based taxation. So these are the four pillars under the new Income Tax Act 2025. Now we are moving towards the what's new or what's the system reform that has been coming up in the new Income Tax Act 2025. So there is a one major thing that has been coming in the new Income Tax Act, that is the timing harmonization across TDS and TCS. So there are the multiple timing rules. So multiple timing rules means the TDS will be applicable at the time of the payment, TDS will be applicable at the time of the credit. Under the TCS, majority of the clauses are applicable, where the TCS is applicable on the basis of the receipt only, not on the basis of the debits. So for this thing, under the entire TDS and the TCS, they have come with the uniform timing principle. That means all the sections of the TDS and TCS, they have come up that the TDS will be applicable on the basis of the credit or the payment, whichever is earlier. Even though, so under the some sections, there was the condition that it will be applicable on the time of the payment only. Now they have come up with the provision that it will be applicable on the credit or payment, whichever is earlier. Under the TCS also, under the majority of the section, it was applicable on the basis of the receipt. Right now, they have come up with the concept if the debit has been done on the customer's account or the receipts, whichever is earlier. So in all the sections, they have come up with the timing harmonization. Now TDS and TCS, credit or debit or payment or receipt, whichever is earlier, on the basis of that, the TDS will be applicable. So these are the uniformity that has been come up in the new Income Tax Act 2020-25. Now, there are the multiple sections under the old Income Tax Act. If we talk, there are the section of 194A, 194, then 194C, 194J. There's a lot of sections are there. So under the new withholding tax architecture, under the new Income Tax Act 2020-25, all the sections of the TDS and the TCS is consolidated into the three sections only. Only three sections are available, are there under the new Income Tax Act 2025. One section is Section 392, under which TDS on salary and the employee payments are covered. Second section is Section 393, that was available for the TDS on the non-salary payments. Third section is the Section 394, that was applicable for the TCS. I'm again repeating the things. All the sections of the Income Tax Act 1961 has been consolidated under the new Income Tax Act 2025 under the three sections only. First section is the Section 392, which governing the salary and the employee payments. Second section is the 393, which is applicable for the TDS on the non-salary payments, and the Section 394 that was applicable for the TCS. So these are the three new sections under which all the TDS and the TCS compliances are covered. Now we can just talk under the Income Tax Act 1961. There are the multiple scattered section 192, 193, 194, 194A, 194C, H, J, 194Q. There are a lot of sections are there. Right now, all the sections are consolidated. So we can say the fragmented law of the different sections are unified under the single sections under the new Income Tax Act 2025. So the unified compliance system under the same section, they have introduced the compliances. Now, let's talk about the TDS on the salary. Under the TDS on salary, previously we have the separate sections 192 for the salary, 192A for the EPF withdrawals, then pensions. So there are the different sections are there under the old Income Tax Act. So under the new Income Tax Act 2025, under section 392, so it covers the salary payment, accumulated balance to employees, EPF withdrawals, non-monetary perquisites, multi-employer salary aggregation, loss from house property, all the sections. And in this, we have to just the new thing is come. There's a concept of the tax year. We have the concept of the financial year or the assessment year in the old Income Tax Act. Under the new Income Tax Act 2025, there is a concept of the tax year, the year in which we are making the TDS deduction, that is considered as the tax year. So the all the financial and assessment year has been converted into the tax year based deduction, right? So the concept is assessment and financial year has been changed with the tax year. So 392 covers all the type of the salary payments that we are doing to the employees. And the tax deduction on that is covered under the section 392. There is a no major change in the rates and other things. The TDS rate chart I will showcase you later on, because there is a nothing changed in perspective of the TDS rates. Only the sections has been changed. Then section 393. This is the master TDS section, you can say, because it covers all the other than salary payments, including the resident and the non-resident both. So what they have done under the section 393 is the single TDS engine, you can say. All non-salary TDS deducted is covered into the four tables of the section 393. So there is the first table which covers the rates of the TDS on the payments to the residents, right? Then second table is there under the section 393. You can say section 393 is the master section for all the non-salary related payment to the resident as well as the non-resident. And it covers the four table. Under the first table, it covers the payment to the residents. Under the second table of the second section 393, it covers the payment to the non-residents. Third table is the payments to any person. It applicable for the winning from the horse races, crossword puzzles. This type of payments that has been covered to the payments to any persons. Third, fourth table is the no TDS cases. Right now, if we see the law, there are the exemption from the certain section. It was covered under the various circular notification, and the exemption has been given under the different section also for the particular exemption. But under the new Income Tax Act, it was consolidated. All the things are consolidated under the single section, and it was divided into the four tables. So this is the very main section of the TDS. I am again repeating it. Section 393 is the TDS master section. It covers all the non-salary related payments to the residents as well as the non-residents. It is covered under the four tables. Table 1 covered to the payment to the non-residents. Table 2 covers for the payment to the non-resident. Table 3 is payment to any persons. which was for the horse races and crossword puzzles, and the exempted cases, that is a table 4. If suppose under the table 1, if suppose under section 194A, it was mentioned that the TDS on the interest has been deducted at the rate of the 10%. So what are the exemptions for that thing is that thing is there, that was mentioned in the table 4, right? So wherever the exemption is there under the particular section, it was appropriately given under the table 4. So no TDS cases will be covered under this. So section 393 governs all the payments. Then the third section is section 394. So section 394, it covers for the complete TCS regime. So in the complete TCS regime, you can say whatever the TCS that has been applicable on the sales of the goods, motor vehicles, scrap, forest produce, LRS remittance, overseas tour packages. So it was all covered under the section 394. So all the TCS sections are applicable to any of the industries or the companies. This was specifically mentioned under the section 394, right? So the key philosophy of the Income Tax Act 2025 is the simplification. You can see they have simplified under the 3 sections only. Uniformity, all the sections and all the things will be covered under the same section only. Consolidation of all the various circulars, notifications, and other exemptions, they are consolidated under the single section. They are more focusing towards the digital compliances, system integration, clarification of the many of the things has been done. So it will reduce the litigation. All the logics are available under the centralized manner. So these are the key reform that has been covered under the Income Tax Act 2025. So I hope this is the new sections, that is 392, 393, and the 394. So these are the 3 sections through which all the TDS and TCS compliances has been governed. Now I can just give you the brief about in some sections there is a little change that has been done under the Income Tax 2025, right? So I am starting with the section 193. So under section 193, threshold of 10,000 has been given. It was available previously also. The threshold has been given. Threshold exemption has been given. Section 193 is it is for the interest on the securities, right? So under the interest on securities, the threshold limit of the 10,000 has been given to the from 1st April 2025. It was available to all. But under this, there is a one proviso is there under section 193 clause 5. That proviso will say that for the debentures which was issued by the widely held company. Widely held company means the listed companies and the public limited companies. For the debentures, they have given the exemption to the resident individual or the HUF only. So it was earlier threshold for the debenture interest specifically. I'm talking about for the widely held company. It was available only to the individual and the HUF. Under the new Income Tax Act 2020-25, interest on the securities, they have given the exemptions to all the recipients, individual, HUF, firms, companies, institutions, whatever it may be. So this proviso of the debentures has been, which was available only to the individual or HUF, is right now available to all the recipients. So you can say there is a standard threshold for all the things under the section 193 for the interest on the securities. So there is a one threshold, one rule, and the one system for the interest on securities. So this is the section 193. This is a little change in the section 193 for the debenture interest. Now, second section that is very important for the banking perspectives. So under the section 194A, so you can say there is a clause 3 of the section 193, 194A. So what it says, the TDS provision shall not apply to the income credited or paid to any banking company or any cooperative society engaged in the business of the banking, including the cooperative land mortgage bank. So in the earlier section, the TDS exemption on interest to the banking companies and the cooperative banks, it was specifically mentioned under the section 194A clause 3, right? Now, the in under the new Income Tax Act 2020-25 under section 392, serial number 7 and subsection 4, in which it was specifically mentioned that the TDS exemption on the interest will be available to the banking company only. So the cooperative bank or the cooperative society engaged in the business of the banking, the exemption that was previously mentioned under the old Income Tax Act 1961, right now under the new Income Tax Act 2025, it was not mentioned. It was mentioned that the TDS exemption will be applicable only to the banking companies. So we have further analyzed this thing, whether the banking company include the cooperative banks or the cooperative society engaged in the business of the banking. So under the section 402 of the Income Tax Act 2020-25, they have defined the banking company also. So under the banking company, what they have mentioned, banking company to which the Banking Regulation Act 1949 applies. But if we check the section 5 of the Banking Regulation Act, it specifically mentioned that the bank is the business of banking in India, and the company means the section 3 of the Companies Act includes the foreign company. If we see the section 5 does not include the cooperative bank within the definition of the company. So if we see all the things, it is look like that they have eliminated the cooperative bank from the exemption. So as per the current understanding of the section 194A, or you can say the current understanding of the section 392 subsection 4, it was imperative that the exemption was removed for the cooperative banks or the cooperative society engaged in the business of the banking, and cooperative banks, only banking companies are exempted, and cooperative banks are now fully under the TDS regime. So we have analyzed this thing from the multiple perspective, and if there is a no specific clarification in the near time it is come, then if we are making the payment to any cooperative bank, interest payment to the cooperative banks, then the TDS needs to be deducted from that thing. So section 194A, interest income. So under this is a very important thing for the perspective of the banking companies. Then there is a one more thing that was related to the motor section. The section is the section 194A only. Right now under the new income tax act is the section 392 subsection 4. So under this it was mentioned that the motor accident claim tribunal. So whenever the interest on the compensation has been awarded, because it is more applicable to the banking company also currently. So whenever the interest on the MCAT, so it was given. So earlier it was mentioned no TDS has to be deducted at the time of credit. TDS at the time of payment only needs to be deducted if the interest payment is exceeding more than 50,000, right? Now they have changed this section. Under this section, it was specific match कि no TDS if total interest is less than or equal to 50,000, and the credit or payment, because they have uniformized the section. The credit or payment, whichever is earlier, TDS needs to be deducted. And for this MCAT, they have not mentioned any specific exemption. So we think it is the drafting mismatch with the taxability on the receipt basis. So it may enhance the litigation risk, because at the time of the credit, we are not able to know to whom the interest to be given. At the time of the payment only, we are able to know the where the interest portion is going on. So we think that this is the drafting mismatch that may be revised in the future, because it contains the many of the litigation days. But as per the current understanding and the current law, the TDS needs to be deducted at the time of the credit or payment, whichever is earlier. The another section is the CBDT guideline power. So previously, the CBDT has been given the power to make empower the CBDT to issue the guidelines for the removal of the difficulties. If in any section, if any clarification has been required, CBDT is issuing the guidelines. So previously, it was mentioned in the section 400, the CBDT guidelines was binding on the taxpayer as well as the tax authorities, right? It was specifically mentioned that these guidelines are mandatorily binding on the taxpayers and the authorities. Right now, under the new section, it was mentioned that the CBDT guidelines are not binding in nature. It is only the advisory guidance for the purpose of the interpretation of the dispute, right? It is only the advisory guidance. So these guidelines are not binding on the taxpayer as well as the tax authority if CBDT is issuing any guideline. So you can say, I can just give you the brief outline for that thing, what actually has been written. The binding nature of the CBDT guideline has been removed. CBDT guideline may be viewed as a clarificatory or the advisory document rather than the mandatory direction. Deductors would no longer have any obligation to follow this guideline and no legal protection merely by adhering to such guidelines. So you can say this opens the door to the interpretational differences and the possible inconsistencies between the jurisdictional officers. So it can, as per our understanding, it can increase the likelihood of the dispute and the litigation. But currently, as per the new guidelines, under the new section, it was specifically mentioned under the section 400 of the Income Tax Act 2020-25. It was specifically mentioned that the CBTD guidelines are the advisory guidance and it is not binding on the taxpayer, the tax authorities. So this is the one of the litigation matter that may arise in the future. Now there are some small changes that has been done. Section 194 DA, whenever the payment of the life insurance policy has been done. Previously, it was mentioned TDS needs to be deducted when the amount is greater than or equal to. Greater than or equal. You have to specifically mention greater than or equal. More than 1 lakh. Then the TDS is applicable. Now, TDS will be applicable only if it is greater than 1 lakh. Exact 1 lakh रहेगा, there is a no TDS. So these are small things that has been done under the section 194 DA. If the amount is equal to 1 lakh, then there is a no TDS. Previously, it was mentioned if it is equal and greater than 1 lakh, then the TDS is applicable. Under the new section, it was specifically mentioned if the amount is more than 1 lakh for the life insurance policy payments, then the TDS is applicable. If it is exact, there is a no TDS. Then section 194 EE. This is applicable for the national saving securities. So under the national saving securities also previously it was mentioned if the payment is making more than 2,500 and equal to 2,500, then the TDS is applicable because the TDS has been applicable for that thing which was because the deduction of this thing is allowed under the 80 CCA. So right now they have changed the threshold limit. Now, if it is greater than 2,500, then only the TDS is applicable. If it is equal to 2,500, then the TDS is not applicable. Now, there is a one clarification that has been sought previously also various moments of the time. Section 194H. So under the section 194H, it was specifically mentioned. I'm just reading out that section. Section 194H of this 1961 Act require that the commission or brokerage to include any payment received directly or indirectly by any person for the services rendered not being the professional services, right? 194H is applicable if the services is not as the professional services. And they have given the definition of the professional services under the explanation 2 of the section 194H. So under the explanation 2, what they have mentioned under the professional services, carrying on the legal, medical, engineer, architectural profession, accountancy provision, technical consultancy, interior decoration, and such other profession as notified by the board. So in this, this does not, if the any sum received rendering of the specific professional services, the TDS is not applicable. But under this, the professional services, under this definition of the professional services, they have not, they have not mentioned the advertisement. So whether the advertisement, if any professional services given for the advertisement, whether the 194J is applicable or the 194H is applicable. So that is the ambiguity previously in the law. So right now that things has been clarified. Now under the definition of the professional services, advertisement has been included. So 194J will be applicable. Only 194H will not be applicable because the advertisement, professional services for the advertisement. If the advertisement expenditure is there, that is already covered under section 194C. If any services for creating the advertisement and all the things, that professional services right now specifically mentioned under the new Income Tax Act section 393(1). So advertisement, if professional services given for the advertisement, then the 194J is applicable, 194H is not applicable. So here the classification dispute that was previously there, right now it was clearly specified in the section only. Now there is a one more important thing that has been done. Section 194 IB. So they have expanded the definition of the rank. Previously, this section is applicable to individual or the HUF who is giving who is receiving the rank who is giving the rank for the building or the land. Right now, the factory building, factory land, industrial rental that was not specified in the definition of the rental. Right now, under the new section, if you say about the section 194I, if we talk about the 194I, which was applicable for the rent, TDS on the rent, in that it was specifically mentioned it will include the factory building, land apparent to the building, and the factory land, industrial rental. It was included there. But if the individual or the HUF are taking the industrial rental, now the TDS liabilities arises even if the rental is on account of the factory building, land appertaining to building, and the factory land or the industrial rental. So these sections previously it was applicable to the land or building only. Now factory or industrial rental is also covered under section 194 IB. That was applicable to the individual or HUF only. So this is the one of the important thing. Then compulsory acquisition. Previously under 194 section 194 LA is applicable only at the time of the payment. Only the TDS needs to be deducted. Now whatever is earlier credit or payment, whichever is earlier, the TDS needs to be deducted. It is for the early revenue collection. The income tax department has come with this thing. So whatever is earlier credit or payment, the TDS needs to be deducted. This is the one of the important sections, section 194N, the cash withdrawals. It is specifically applicable to the banking companies. So banking companies needs to deduct the TDS when the cash is withdrawal by the customers from their account. Previously, it was mentioned that if the particular customer is withdrawing the cash more than 20 lakh, right? And they have not filed the return of the last 3 years, then the TDS on the higher rates needs to be deducted. But in this case, what needs to be done by the bank? They have to check whether the particular customer has filed the last 3 year returns or not. So the condition of checking the last 3 years return has been completely removed. Now the TDS lower threshold of the 20 lakhs and the penal interest is also removed. Now the compliance burden that was on the banks has been removed completely, because they are not supposed to right now they are not supposed to take the last 3 year returns from their customers. So this change, you can say, is the consistent with the Finance Act 2020-25, which also omitted the section 206 AB and 2066 CCA. This section had earlier imposed the higher TDS on the non-filer of the returns. So you can say in the same lines, they have removed the condition for the cash withdrawal to check whether the last 3 year returns filed or not. If the last 3 year returns filed, the higher rates and the lower threshold will be given. Right now, this was completely removed. There is a right now the simple section. We are not supposed to check the threshold of 1 crore and the 3 crore for the cooperative society will be there. And there is a no limit for the 20 lakh threshold or the last 3 year returns filed or not, or the 5% penal rate. Only the 2% rate will be available. So this is the one of the more important thing for the perspective of the banking companies. So these are very important things that has been amended in the new Income Tax Act 2025. Now this is also very important, section 197, that is for the lower deduction certificate, right? So for the lower deduction certificates, it was mentioned earlier, it was available only to the limited sections previously under the old Income Tax Act. You can apply the lower deduction certificate for the section 192, 194, 194A. So right now, this lower deduction certificate has been expanded. Now it is applicable for all the TDS provisions, and any person they want to take the benefit of the lower TDS, they can apply on the Traces portal to get the lower deduction certificate for all the sections. So it is a uniform relief mechanism for all the assessees. So lower deduction certificates can be applied for all the sections right now. Now, TCS, earlier it was mentioned that the TCS will be applicable only on the receipt, section 206C 1F. Right now, under the new section, you can say section 394, subsection 1, in what it was specifically mentioned that the TCS right now applicable debit to the buyer account or the receipt, whichever is earlier. So this is a major reform that has been done under the TCS. So it will increase the revenue of the government because they can take as soon as the debit to the buyer account has been done, even though the receipt will not be there. So you can say the consistency has been done in the entire sections of the TDS and the TCS. PAN rationalization, PAN provisions. Earlier, there are the various separate sections for the higher rate of the TDS deduction where the PAN number is invalid or PAN number is not available. There are the separate section for deduction of the TDS on the higher rate at the rate of the 20%. So separate sections are there 206CA for the TDS and 206CC for the TCS. Now, under the new Income Tax Act, the same section has been incorporated into the main provision only. So there is a no separate section for this PAN related thing. Under the main provision only, they have covered the higher rates of the TDS deductions if the PAN number is invalid or the PAN number is not available. So separate section is not there right now. Now, this is one of the important thing that has been a very critical. You can say previously there is a correction statement, because whenever we file the TDS return, the correction statement needs to be filed for that thing. If any PAN number has been updated, if any amount has been updated, or TDS needs to be changed, so assessee has to file the correction return. Earlier, the longer timelines has been given for filing the correction of TDS or TCS returns. That was the 6 years, right? So in which financial year you are sitting, to previous six financial year, you can revise the TDS return, right? Now, under the new Income Tax Act 2020-25, the time limit to furnish the correction statement has been reduced to 2 years. So, from 6 years to 2 years, the time limit has been reduced. So, you can say the faster compliance cycles will be there, faster reconciliation you have to do. The assessee will get the faster credit, and it will improve the system discipline. So this is the very, very important and the critical timeline that has been introduced under the new Income Tax Act 2020-25. Now you have to revise the return up to the last two financial years. So I am just taking an example. Suppose 2 year time limit, it is effective from 1st April 2026. So all pending TDS corrections up to financial year 23-24 must be completed by 31st of March 2026. This is very important. Financial year 2024 up to quarter 3, because quarter 4 we will have the another time limit, because the 2 years has not been completed for that thing. So, but we can take the target of the financial year 23-24. So whatever corrections that has been pending up to financial year 23-24 must be completed by 31st March of 2026. So only the 2 years remain there, for which you can file the correction return afterwards also. So 23-24 correction return needs to be completed and filed by 31st March 2026. If suppose you have not filed the returns, what will be the consequences? So, if the correction return has not been filed, and if any default is outstanding on the traces portal, then tax demands and the interest, it will be the permanent in nature. You are not supposed to rectify that thing. If any deductee has not get the credit in this particular financial, they will lose the TDS credit, irreversible PAL and challan mismatches, and increase audit and the compliance scrutiny, because department will follow wherever the demand is there to take the recovery for that thing. So it is very important to rectify all the TDS correction statement up to financial year 23-24 quarter 3 before 31st March of 2020-26, because from effective from 1st April 2020-26 there is a time limit of only 2 years. So 31st March 2020-26 is the deadline to file all the pending correction returns up to financial year 23-24 quarter 3. So this is a very critical thing and very important thing. Right now, in the previous financial year, they have come up with the concept that last 6 financial year you can revise, right? Now the question is arises, we have not filed the correction return, even though we have made the payment, but we are unable to file the correction return. So TDS department has come up with the new feature. So the new feature is that it is on the traces portal, they have given the concept of tagging of challan, right? For the time barred return. Suppose the financial last 6 financial years, you are not supposed to file any of the return, but you have made the payment, or you are making the payment now also, suppose. So department has given the feature that whatever challan you have paid and whatever default that was outstanding for the time bar return, because you are not able to revise the time bar return. So department has given the new feature of tagging of the challan with the default. So what you have to do, you have to go under the refund for the demand management functionality, and you have to tag that particular challan with your default. So it will help the legacy or the default demand without filing the fresh correction statement, because for the time bar return you are not able to file the correction statement. So for that thing, Traces has given the feature for tagging of the tagging of the challan for the time bar returns, and it was live right now also on the Traces portal. You can just go, and even though you are not able to revise the return, if you make the remittance for that return, you can just go and tag that challan and that default will get removed. So this functionality is available right now. So as we have to go and we have to tag the channel. So this is a very important feature just now live by the TD Income Tax Department. Now there is a processing gap. There is a one thing that has been skipped, I think, by the Income Tax Department and the new Income Tax Act 2020-25, non-deductor statement. So whenever we are filing the non-deductor statement, because the deductor who is there, for that they have given the provision that return will be processed by the traces. For the non-deductor statement, they have skipped the provision for the processing. So this corresponding provision that was available in the old Income Tax Act, it is right now not available in the new Income Tax Act, but it is for the non-deductor statement only. For the deductor statement, it is already available. So I am just giving you the conceptual summary. The Income Tax Act 2025 does not merely the amendment of TCS TCS, it re-engineers the India's withholding tax system into a unified digital system delivered in the compliance architecture. So this is a thing that has been introduced by the new Income Tax Act 2020-25. I am just showcasing you quickly the TDS rate chart that was available and with the mapping of the old section and the new section. So you can see what are the old section name is there and what are the new section that was named under the new Income Tax Act. I'm just showcasing that screen. A nail screen is visible.
Yes, it is.
Okay. So I'm just showcasing you what are the old sections, what are the new sections, right? So this is the old section, section 192. It was replaced with the section 392. Salary, if you can say section 392 is for the salary, right? So under the old accumulated balance is section 192A. So it was covered under new section. Rate has not been changed anywhere. So these are the and the terminology has been changed to the tax year in all the cases. Insurance commission, the previous section is 194D. Right now the section number is section 393 1, 1 and 1. The rate will be same. Commission or brokerage, section 194H, it is covered under section 393 1, subclause 1, subclause 1 and subclause 2. And the rate is same. And if the exemption is there for this particular commission or brokerage, it was available under the section 393 4.1. So it was available under the same section, the exemption and the TDS rate, both the things. For the rent and building, this definition has been changed for the 194 IB. I have already told for the land building and the factory building and the industrial rentals also it was covered. And the rate is the same only. And the old section, what is the new section and where the exemption has been given. So all the things has been mentioned in this chart. There is a no change. Rent and section 194 IA, IB, there is a no change in the rate and other things. And the exemption list has been given under the section 393.4.2 if any exemptions are there for this rent. Transfer of immovable property, compensation for compulsory acquisition. So we have mapped all the sections and we have mapped the exemptions also where the exemption has been given. And we have group also this thing. If you can see 393.1.2 is for the rent. 393.1.1 is for the commission brokerage. 392 is for the salary. Then 393.1.3 is for the payment of immovable property other than agricultural land. 393.1.4 for the income from the capital market. Then this is the section 393.1.5 for the interest on the securities and the others. For the 194C, technical fees, professional fees, dividend. So the section of 393.1.6 where the payment to contractor fees and professional technical fees is covered. Dividend under 393.1.7. So this is all sections that we have mapped. 393.1.8 is covers the life insurance policy. 194Q section, which was old specified senior citizen, 194P and 194R. So it was covered under section 393.1.8, right? Then is the e-commerce operator, virtual assets, 393.1.8. Payment to any person that I mentioned, that was in TDS one winning from games, house property, cash withdrawal, that was covered under the section 393.3. Then there's a three non-resident payments. It was covered under 393.2. So this chart we will mail you to all the presentation and the chart after this meeting. And anyone is having questions now, they can put on the chat board or the question answer sections also. I'm just giving this outline. So this is all for the income, and this is a chart for the TCS. TCS also we have mapped. There is a no change in anywhere. So this is the what is the old, what is the new section, what is the rate under the new Income Tax Act. So this is all a brief about the TDS rates and the old section, the new section, and whatever the changes that has been done on the new Income Tax Act. I have given the specific section wise. So that we will share you shortly. And in case any questions are there for anyone, uh, they can uh, uh, they can ask.
Yes, so this was all from our side. Thank you, Himanshu. The session was really very informative and insightful. And I hope we have been able to cover almost all the changes with respect to TDS and TCS under the new Income Tax Act. Now, moving
So
ahead
there
with
is a
the,
one question. There is a one question
yeah,
relating to the. I'm just taking one by one. I
you
think
can see
most of the
the
questions have
chat
replied also.
box. Yeah,
Yeah, yeah.
we also have our panelist, CA Vineet Bhutra, who has answered, most of the questions. So, any more questions coming up, we'll answer.
So first question is what the challan payment uh, needs to be updated in the at the time of the payment. So right now, Income Tax Department has not come up with the new section list under the Challan Payment Portal. So till the time it was not come, so we think under the old section only. Likewise, we are making the payment. We have to make the payment, and if the Income Tax Department has come up with the new section on their portal, then only we are able to do that thing. Because right now they are not come up with the new sections list on the portal.
Okay. Next one is in FY 26-27, if there is no PAN or invalid PAN, what would be the TDS rate?
One minute.
The
This is
latest one.
so one TCS was removed from first April because it is again in corporate section. So that TCS is separate thing. Whatever exemptions you are saying, that was right now also that was removed only. The old section that was there, that was only incorporated into section 394. An important 194C was there to cover advertisement and not one. Would please explain? Yes. So I've already mentioned the advertisement was never covered under the 194H because it was professional services for the advertisement. I am saying you there is a two types of things are there. One is the advertisement, one is the professional services for the advertisement, right? So there is a conflict that the professional services for the advertisement where it is covered. So it was the dilemma that the professional services for the advertisement will cover under the 194H or 194J, because under the 194H, under the professional services, they have not specified the professional services for the advertisement. So that was mentioned. Normal advertisement, whatever we are incurring, it is covered under the 194C on. I hope it is, I clarify for that thing. No TDS on cash withdrawal. So cash withdrawal के अंदर में I am just wanted to add there is a TDS on cash withdrawal. They have only removed the clause for the higher rate TDS deduction. Where is the higher rate TDS deduction is there when the particular person has not filed the last 3 years of the returns, and we have to given the threshold of the 20 lakh instead of the 1 crore, and we have to deduct the TDS at the rate of the higher rate of the 5%. So that clause has been removed, that bank is not supposed to check the last 3 years return, and they are not supposed to deduct the TDS on the higher rates. So that clause has been removed. If the person is withdrawing the cash more than 1 crore, and for the cooperatives, if they are withdrawing more than 3 crore, then the TDS is applicable. For the 20 lakh limits, they have removed that thing. There is a no change in the process of the 26Q. One more thing I just want to add. TDS department is right now coming with the traces 2.0 also. So it is under the, you can say, testing phase only. So under that, they are planning to take the data on the basis of the API. So as soon as that will come, so traces 2.0 under the line only. But currently, the 26Q return, that what we are filing under the same manner, currently as per current scenario, we have to file that on. Section 194C, there is a no amendment of the Section 194C, but the section number has been changed. I have mentioned also under the rate chart also. Section 194C is covered under the section 393 1 subsection 6 clause 1. So the question, the system not developed at GST they have done. So they are under the process traces 2.0. We are thinking it is like the GST only. If there is a no PAN or invalid PAN, what would be the TDS rate? The 20% will be the TDS rate. It was incorporated in the section only. And you have to deduct the TDS on the higher rates of the 20% only. If the PAN, no PAN or invalid PAN is there.
Any change in the due date for payment of TDS?
No, there is a no change in the due date. TDS on property sale, any changes in the new act? So currently there is a no such change under the TDS on the sale of the immovable property. No change in the challan payment. So anything more? I think we have covered all the questions, Neil, or anything is pending?
Yes, we have covered almost all. So in case
We
if
will
they have
share
any more
you.
questions, yeah,
We will share you the presentation copy and the TDS chart. So
rate
TDS
chart.
on non-resident, someone has asked any change. There is a no
Yeah.
change in the TDS on non-resident related thing. Only the section number has changed. Which we have mapped also that we will share you over the mail.
Any improvement in the process of revision of TDS returns?
Yes, so there is a one major improvement that has been done by the TDS department. If you say हमारे 6 साल के पहले के रिटर्न थे इफ यू से द लास्ट 7 years returns is there 2010-11 we have one return in which the default is there, so in which the default is there and you have not revised that return but you have made the remittance, right? If you have made the remittance, then right now there is a no such thing previously available with the department, previously available with us, that we can tag that challan with the default. Okay. So the revision activity that was pending for the legacy data, right now we can tag that challan. Department has come up with the tagging of the challan mechanism. So you can use that thing for the purpose of tagging of the legacy returns. But for the regular correction return, you have to follow the same procedure only. Quarter 1 financial year 26-27 used balance challan. Financial year 25-20. Yes, you can use that challan.
Okay.
Vision of TDS return use challan 25-26 or 26-27 you can use the challan. Is there any time limit for time barred correction? So time barred correction, there is a right now there is a no such time limit. They have mentioned they have given the functionality to tag the challan. If you make the challan remittance for that thing, you can tag that challan on the traces portal. Even if the time barred return is there, you can tag the challan. You have to go on the traces portal. Outstanding demand tab is there on the default page, and like that you can make. So there is a no such time limit they have given for the time barred correction. So very good question has been come since TDS sections are merged. Will they merge the return also like one return instead of 24Q26 like that? So currently they have not specified the return related thing anywhere. They have just told the return processing will be there for all the deductors, but the consolidation of the return, uh, how the section needs to be mentioned in the TDS returns because the new section has been coming and the new schema is not yet come where the new section has to be mentioned. So we are expecting that because the first quarter return we have to file by 30th of 31st of July. So by that time we will get all the things, what type of the returns formalities they are coming with it. Because under the TDS sections, whenever they have merged also, no, they have merged सेक्शन 392 एक अलग करके रखा हुआ है, देन 393, 392 फॉर सैलरी, 393 फॉर द resident and the non-resident, and 394 for the TCS. So we don't think the merging of returns will be there. The returns will be there more or less. You can say the resident or non-resident they can merge, but right now we have no idea whether they are merging or not. Currently, they have not given any specification for the merging. So currently, we can say there is a no thing like that. The merging of the single form will be there, but the section will be the same. Section 393 covers resident and the non-resident both, and there is a separate parts for that. The part one cover is resident, part two is covering the non-resident. So currently, they have not specified the merging of the return. So currently, we have to think. We have to say that the separate returns needs to be filed till the time we not get any update.
I guess we have covered almost all the questions.
Anything more, if anyone has to ask, please don't hesitate. Please ask. I think, Nehal, we have replied
Yeah.
for all the queries. Till now, we have received. If anyone is
Yes, we
having
have done
any
that.
other queries also, they can mail us down or they can connect us also for resolution of the
Yes.
queries.
Yes, in case if you have any further questions, you can anytime reach out to us at office@figmentglobal.com. So that's all for the day. And thank you everyone for taking time out of your busy schedules and joining us today. And we'll come back again with more such webinars in the coming days. Thank you. Have a nice day.
Thank you. Thank you so much. We'll share the PPT. We'll share the PPT.
Yeah, yeah. We'll share the PPT over the mail to all the participants. Thank you.
Thank you.